Jeremy Grantham is a renowned British investor, co-founder, and chief investment strategist of Grantham Mayo Van Otterblue, GMO, a Boston-based asset management firm. Grantham has built a reputation for his cautious stance on the market, especially when it comes to predicting bubbles and crashes. In this video, we are going to delve into his bold prediction of a severe market crash, which he believes will be the largest super bubble burst since 1929. Why does Jeremy Grantham believe we're on the verge of this massive collapse? Let's break down his theories and predictions. In a recent video, Grantham explained that history has shown us that when the market reaches a level of irrationality, it tends to implode within a few months rather than stretching the collapse over years. According to Grantham, this is exactly how the great bubbles have burst in the past. He pointed to 1929 as the most glaring example. During that time, the blue-chip stocks and the S&P 500 remained strong until the very end. But the real leaders of the market, the stocks that had previously been performing the best, collapsed, marking the beginning of the Great Depression. Grantham also highlighted a concerning divergence within the market. Specifically, he pointed to the Russell 2000, a stock index that represents smaller companies, which failed to follow the typical rise seen in a bull market. Normally, the market would see about a 10% increase during a bull market, but it didn't even come close to that this time. According to Grantham, such a massive divergence has only been seen during the super bubbles of 1929 and 2000, the two most significant market crashes in modern history. Grantham warned that these super bubbles are dangerous. They can destroy wealth and decimate portfolios. He claims that we entered into a 3 sigma territory, otherwise known as super bubble territory, just a few months ago. A super bubble refers to a massive, unsustainable expansion in asset prices that has the potential to burst dramatically. Grantham warns that these super bubbles can obliterate investors, as they did in the past. To add to the gravity of the situation, Grantham points out that we are also experiencing bubbles in other areas, including the real estate market. Last year, the U.S. housing market reached new highs, with prices increasing by 20%, despite inflation being much lower. He observed that this trend was not isolated to the U.S., but was a global phenomenon, with other countries such as Canada, Australia, and even major cities like London and Paris seeing similar patterns. This kind of worldwide real estate price inflation could lead to significant financial suffering on a global scale, Grantham warned. Grantham also shared his thoughts on inflation, something he had not written about in recent years. He had previously ignored inflation in his quarterly letters, as he didn't think it was a major concern. However, with recent trends in mind, he now believes inflation is back on the radar. According to Grantham, inflation is unlikely to return with the vengeance it saw in the 1970s or 1980s, but it will still be a persistent feature of the economic landscape moving forward. He predicts that inflation will be part of the scene in the second half of the 21st century, just as it was for much of the 20th century. One of Grantham's most notable statements was a prophecy-like warning about the state of our planet and its resources. He argued that the world is running out of cheap natural resources such as oil, nickel, and copper. As we begin to reach the limits of these finite resources, we will face more bottlenecks, shortages, and price spikes. Grantham stated that the UN Food Price Index has already reached alarming levels, which signals that the challenges of producing food are only going to worsen. This change in resource availability will be compounded by severe droughts and rising temperatures, leading to economic instability. Grantham emphasized that commodities tend to perform well during periods of inflation. As inflation rises in the future, the demand for commodities could soar, leading to price hikes in essential goods like food and energy. This scenario could cause further financial strain, especially for the global middle class. On the topic of labor, Grantham raised concerns about plummeting fertility rates, which he believes are a sign that we are running out of labor. China, for example, has seen a dramatic drop in the number of births, with just 1 million babies born last year compared to the higher numbers of 7 or 8 years ago. Grantham warned that this demographic trend would have serious consequences for the workforce, especially as the cohort of young adults entering the job market becomes smaller. This trend is not limited to China. Many developed nations are facing similar challenges, which could have serious implications for global economies. Grantham also took aim at the Federal Reserve, arguing that they have been oblivious to the pain that comes with the bursting of a bubble. He pointed out how, during the Greenspan era, the Fed had helped to fuel the tech bubble by encouraging optimism about the Internet's impact on productivity. However, Grantham argues, productivity has gradually declined since then, and when the tech bubble burst, it was brutal. Grantham believes the Fed didn't learn from this experience and instead encouraged the housing bubble by ignoring its existence, even though it was a 3 sigma event that had never happened in the U.S. before. He says the Federal Reserve's policies of excessively low interest rates were an attempt to prevent market crashes, but ultimately only served to exacerbate the crisis. Grantham posed a critical question: who benefits when interest rates are pushed into negative territory? The answer, according to him, is the wealthiest individuals, those who own the majority of assets. The top 1% of the population controls 99% of assets, and when interest rates are low, these individuals benefit the most, while the bottom 50% continue to struggle. Grantham pointed out that during the past 2 years, the top 0.1% saw their wealth double, while the bottom half of the population did not experience the same financial growth. To summarize Grantham's viewpoint, we are in the midst of an unsustainable bubble, and the risks associated with it are immense. If you've been following his predictions, you know that Grantham has been warning about market crashes for years, and it appears that the signs are finally coming to fruition. Whether or not you agree with his outlook, it's clear that the global economy is facing significant challenges in the years ahead. Grantham's analysis of the current economic situation offers a stark warning about the future. He urges us to recognize the signs of a bubble and act accordingly before it bursts. While this forecast may seem pessimistic, there's no doubt that history has shown us time and time again that market bubbles can lead to disastrous consequences if they are left unchecked. Do you agree with Grantham's outlook on the economy? Do you think we're on the brink of another major market collapse? Leave your thoughts in the comments section below. Before you go, don't forget to hit the like button if you found this video insightful, and make sure to subscribe for more content on the global economy, market predictions, and financial strategies. Thank you for watching, and we look forward to seeing you in our next video.